Welcome to the Skeptic's Guide to Investing with Steve Davenport and Clem Miller. Every 2 weeks, Steve and Clem bring you brief investment insights you may not find anywhere else. We hope you enjoy today's episode. Here are Steve and Clem.
Hello, everybody, and welcome to Skeptic's Guide to Investing. I'm Clem Miller. I'm here with Steve Davenport, and today we're going to be talking about the fact that NVIDIA yesterday reached a high of $5 trillion market cap. The first time any company has ever reached such a market cap. And, of course, NVIDIA, ticker NVDA, is kind of a market darling right now. It is the number one designer of AI-related chips, gaming chips as well, but AI-related chips. Has developed yet another advanced chip called Blackwell. These are GPUs, by the way, graphical processing units, these AI chips. And also is does a software stack, as the industry calls it, on top of the chips. So they're also a software manufacturer, and they've got various partnerships to provide AI chips for certain industries. Just yesterday was announced a deal, a partnership between NVIDIA and Palantir, the defense advanced software manufacturer, who's now trying to get into commercial markets. And so they're working with NVIDIA on that. So NVIDIA, is sort of the emblem, I guess we could call it, of what's going on with AI and the AI economy, which of course extends way beyond NVIDIA, but they are the central part of it. Steve, what do you have to say? While I sneeze.
I guess I'd say that I didn't expect this to keep happening. I mean, we came out with an August podcast about the frothy fourth, and I guess I just keep seeing the market go up. And I think that part of it is the Fed cut. Part of it is, in general, we don't see things on the headlines that indicate there's risks. But I think that with the government shutdown going on, I don't know how we would measure it or determine that. So I think it's a little bit like we're driving blind now. And by driving blind, I don't think that's a really good thing in terms of what are your guardrails and how do you make sure you stay on the road. So I believe that NVIDIA is a great company. Is it a company that should be $5 trillion? I can't tell you what's going to be the top 10 companies in 10 years. But I can tell you that every time we do this and we look back at the best companies 10 years, usually one or two survive. And maybe it will be one or two of these companies. But when you look at Google, Amazon, Microsoft, Tesla, and NVIDIA, you see companies who have unique advantages and are special organizations. And what I believe is, I believe that the U.S. in Silicon Valley has created a source of innovation and a source of growth that is unlike any other country in terms of educational institutions, investors, early private investors, late stage investors, large funds that want to support these companies because they believe that some of them are going to change the world of the technology and how it gets used in our economy. So, yes, I think that it makes sense that they are now the top of the heap. But just as anything, Clem, I mean, when you get really good, when you're Ohtani and you're hitting home runs and just striking everyone out, it's there's people who are going to come for you.
Yeah.
And in the next game, Guerrero hits a home run. It's off of Otani. And I think it's we have to realize that becoming more of a target and becoming a larger firm and becoming that big, the ship gets harder to move. And I've used this analogy before, but this is a large tanker now rolling across the ocean, but it's not going to turn on a dime. And it's not going to, give you all of the returns, ad infinitum. Trees don't grow to the sky. And I look at this and I think, there's a DeepSeek, which upset the whole AI universe in February, is coming out with a new version of their bot. And DeepSeek in December 1 will be releasing the newest version. And my question is, what if it's good?
Hmm.
What if it surprises people again and they're using non-NVIDIA chips and their advantage has been they're programming it better. And so by programming, they, have figured out a way to make their model as good as ChatGPT, maybe better. And so everyone is always going to face challenges. And I think that when you hit 5 trillion, you celebrate, you pop some champagne, you have a round, and then you say, okay, we got to get back to work because it's even harder now. Growing 20% on a $5 trillion is adding another $1 trillion. They added this last trillion in 70 days, which is the fastest amount of time anyone's ever added a trillion in market cap.
Yeah.
I think that's, things are moving fast, people. And I think if we thought it was overpriced or frothy in August, we have to say it's frothier now. And I have no trouble saying that I think it's ripe for a correction. I think that a correction would be healthy. I think a correction would start to make people realize, and we would separate some of the short term, I'm buying call options. I don't really own these names. I'm just betting. And I think the speculation is different than investing. And what we have right now is a speculative furor with names like Oklo and other things that are just going up without any revenue or earnings.
Yeah.
So I don't think you can separate NVIDIA's at 5 trillion. Oklo is up 600% this year, and some of these other things. I think they're all related to a market that's looking for extreme advances and short-term investors. And I don't think that usually translates into a long-term good result. So I think people need to be a little more cautious, and I'm going to continue to beat the skeptics drum. Are you still a skeptic, or are you on board with the NVIDIA party? Have you popped your champagne club?
Well, I do have NVIDIA in my portfolio. I think probably you do too, Steve, and
Yeah.
others do. I have been trimming it as it's been going up. I've become the great trimmer lately with gold and other things because I do think the market is frothy, and I do think that eventually we'll have a downturn. And when we have a downturn, I want to have a lot of cash. And when we reach the downturn and start to pick back up, that cash allows me to buy a lot of things that I think are going to do better at that point in time. And who knows? Maybe it'll be buying back some of the things I had sold around now. Who knows, right? But I think it's helpful to be trimming now some of these stocks that have been rising a lot. I do have a lot of comfort with the AI story. And what helps me be comfortable with the AI story is that I do have a lot of cash and gold in my portfolio. So I feel those are offsets to some degree to the AI story. Not offsets, but really, if AI starts to falter, gold presumably, although I'm less comfortable with that concept now for gold, but presumably gold will do well if AI goes down. So from a standpoint of a risk reducer,
Yeah, I
um,
mean, cash is a great reducer.
yeah, cash is the ultimate reducer. And right now I've got about a
Uh,
quarter of my
Put options are the ultimate reducer, but
well, okay,
cash
I've
is,
got about a quarter of my portfolio in cash right now, and about 10% or 11% in gold at the moment. Um, but a lot of the rest of my portfolio are in sort of AI adjacent stocks, not just, NVIDIA, but also in a lot of the construction companies and the power companies and all of that are helping to build the data centers that are required for AI. Also, I'm in some semiconductor stocks other than NVIDIA. Uh, but, and here's a key thing, I'm not in Tesla. I'm not in Amazon. I'm not in Apple. And I'm not in Meta right now, right?
well,
And, and I think those stocks, uh, to some degree, have gotten away from their fundamentals in terms of their prices. I still have Microsoft. I should have sold or trimmed that a lot, but I'm still holding on to it because I think there's some positive story there left. And I do hold Google, which I'm glad I do. Continue to hold Google, but I'm not nearly as exposed to the Magnificent Seven, quote unquote, as a lot of people are, and as the S&P is exposed to it. So, I think I've done quite well by sort of going for other companies that are sort of in that whole AI world, rather than the ones that I had trimmed like Meta and Amazon and Apple, trimmed or gotten rid of Meta, Amazon, Apple. Um,
Clem, can you help me? I think that investors have this term or feeling about cash as like you're stepping away and you're not earning anything. When you have something and you say it's in cash, what vehicle are you using and what's the yield
oh,
on?
it's a money market, so it is making money, right?
Correct. That's
So it's got a yield on it. It's not a great yield. It's actually a yield that's better than dividend yields for many stocks, right? But it's got a yield on it, and
Do you mind sharing what the yield or what the
oh,
vehicle is?
I haven't looked lately, but it's a money market, so
So you're saying 2 to 3?
that would be my guess, somewhere between 2 and 3%, which is higher than sort of the S&P 500 average dividend yield,
Correct.
right?
Just want to say to people that, hey, when we say we're taking things off, we're taking off the equity risk of downside.
Correct.
And the risk we're taking when we move to cash is against inflation, really, because if
Right.
inflation moves more. And so by doing a 2 to 3, if you think inflation is going to be less than 2 to 3, which I think you can debate, but you're not losing purchasing power in a lot of these cases because there are vehicles out there that that try to make those decisions to be in cash, to still have some yield and so while the Fed is lowering rates, we're still making money. It's just that we're not taking the market
Right.
exposure or the individual stock exposure.
Right. Now, I'm not a big fan of bonds, as you know. I
I
mean,
know.
the thing about bonds is, yeah, you can get a higher yield, right? A higher current yield, a higher coupon, but it can the longer term yields, this goes back to what we talked about in our Fed discussion. Longer term yields can whip around, and that can affect bond prices. And depending on how long your duration is, that can really have a multiplier effect on what happens with bond prices if yields go up or down. So I'm not really all that comfortable with bonds. Whereas a lot of people might have bonds for a certain part of their portfolio. as in AKA the 60-40 portfolio. I don't really believe in that 40 part, but I do believe in like a 30 to 35, at least right now, a 30 to 35 cash plus gold part.
Okay. I just think as everybody looks at the NVIDIA going across 5 trillion, it is a celebration of success for US ingenuity, US technology, and US ability to nurture companies and have employees that are, diverse and across all kinds of skill sets from all over the world to solve some of these problems. Our legal environment is strong, our banking environment is strong, our investing market and economy is strong. So I believe that these companies are going to be great companies. The question is, from this point forward, will the return mirror the past? Will the returns have to pause to give the joy that refreshes? I think that a pause would be healthy here. And I believe that a pause or some question about what's happening with China in the rare earth space or in the deep sea space will cause this rally to come to a correction. I don't know how deep the correction will be, but I would say that given the movements we've seen in some of these days when things get uncertain, the movements are much faster and much more severe than they've ever been. So in that way, I think that if you're interested in options and option strategies, I work at Circuit Capital and we can help you with those. Um, Options are a choice, just like cash, just like gold. So at Circuit Capital, I've been working with options over the last 20 years, and that's part of what we do for clients. So I think that everyone should think about how their portfolios are structured and how, if anything, they should change them as they head into this, end of year and holiday season. It's usually a strong term for markets, but this is a little bit different time. And I think that over the next day, we're going to hear a lot about China and the meetings in Korea. And I hope we find more things that are going to make us confident of the rally and what's going on going forward. So, Clem, any more comments about NVIDIA and the 5 trillion?
Well, I would just say that, you mentioned the China talks. This was, I would say, at best a temporary truce. And there's a continuing economic and technological war between the US and China that I think is going to continue, persist, perhaps get even worse. So that's the first thing I would say. Second thing I would say is, everybody talks about American exceptionalism as driving the market. I don't think that's the right way to describe it. I think the right way to describe it is to say that the US has an unusual concentration of advanced technology firms in Silicon Valley writ large. And by writ large, I mean not just the Bay Area, but also in the Seattle area, right? So,
And also in the Boston area.
yeah. Or you could throw Boston in there too, right? So you got that sort of greater Silicon Valley, which is where, if you took the firms that are in those locations out of the picture, I think our American exceptionalism wouldn't look as, in terms of the market, wouldn't look as frothy or as strong, really, as it does now. And why? Why, you may ask, do we have this concentration of excellent advanced technology businesses in these areas? Well, it's because you've got excellent universities in those areas. You've got venture capital firms that are providing capital in those areas. You've got, because of the universities and the venture capital, you've got an incredibly highly advanced workforce in those areas. I mean, even when a particular firm might lay off people, have a different change in direction, may lay off people. Those people almost always can find jobs at other firms in the same complex of advanced technology. So it's, that's what drives our exceptionalism. And then, in China, you've got the same thing going on. You've got the whole Shenzhen area, which ironically they also call the Greater Bay Area, right? Hong Kong, Macau, Shenzhen, Guangzhou, I think, in the Greater Bay Area, and that is also an advanced technology complex. They have advanced technology in other places in China, but that's really the center of it all. So yeah, it's, we're really talking about a world where, advanced technology companies, the ones with the greatest market caps, are located in pretty small areas, pockets, and the vast parts geographically of the U.S. and other parts of the world, including practically all of Europe, for example, are less advanced.
Yeah, there's nothing wrong with them. We still like to visit, and they're wonderful, reminders of history. But if you're looking for the best companies, some of the best,
ASML would be the exception, I think, that proves the rule.
And I think we know that Taiwan's FEMI in Taiwan. There are examples of exceptionalism all around the world.
Yeah.
We're just saying that, hey, the move of NVIDIA and the concentration of the top 10 in the world companies right now being U.S. companies is based on a lot of good reasons. And we think that it's not a time to run from the markets. What we are saying is it's a good time to look and think and try to rationalize your position so that you're positioned if things were to go the other way. So again, thanks for listening to Skeptics Guide. We appreciate your support, and we really like delivering these ideas to you in educational purposes. And we hope you, improve your investing IQ and financial wellness with us. All right. Thanks. Anything else, Clem?
Nope.
All right. Be good, everyone.
The views shared on this podcast represent the personal investment views of the hosts. They are for educational purposes and not meant to be taken as investment advice. Listeners should consult their own investment, legal, and tax advisors. Past performance of any investments is not a guarantee for future return.